Let's welcome in our market master of the day. Gautam Shah is founder and chief strategist at Goldilocks Premium Research. Gautam, good morning. Great to have you with us here. I'll tell you, this election year, and I thought January perhaps will be a little weaker, seasonally it's weaker. So January we got the volatility. At a slightly sort of top-down level, I thought maybe till March the market will not do very much and then we'll start an election rally. But there is no stopping, there is no halt, so as to speak. That's not in the dictionary. The rally is on, and we all saw what happened yesterday. Just your thoughts, near and medium term.
Good morning, Prashant. Well, 3 months is a very long time. I think we live in a world where everything is happening really, really fast. So if the markets have to go up, it's fast. When the markets have to go down, the discounting and the correction happens in a few days. Watch what in the earlier bull markets used to happen over many weeks. At the start of this month, we were very clear that January is going to be a little challenging, and we recommended not to take any adventurous longs. We went through a sideways correction. It was more range bound in nature. The Nifty lost about 4%. So we had that 800-point, correction from the recent high all the way down to the recent supports. But the manner in which we have stabilized, I think, is quite commendable. To understand bull market, sometimes you have to study the down days and not the up days. Because when you have a very overbought scenario and the market refuses to break support levels, it just tells you that there is a lot of strength in the system. And the manner in which Reliance just single-handedly took the market higher in the last couple of days just tells you that this market has a lot of stocks, heavyweight stocks, batting for it. But as we stand today, I think 21,850 is a very important resistance number. I think there could be a bit of a challenge to clear this. But if the market does get past this number, I think we are going back to lifetime highs of about 22,200, 300. But I don't see a runaway rally. I think I've been maintaining this view that we are going to be mostly range bound. But I think this is a very theme specific, stock specific market, and support levels are, holding up well. So we simply don't overanalyze, and we just tag along, keeping support levels in mind.
Okay, so 21,850 is the line in the sand on the upside, right? And you're saying that if that hurdle gets crossed, then it's on the way to new highs. But we can't talk about a market move without talking about Reliance. I mean, in the last couple of days, that's been the front runner. Do you see more upsides here, Gautam?
I think the working view for the last few weeks is that the IT sector and Reliance, put together had a very good chart setup. In fact, Reliance is coming out of 15, 18 months of underperformance. So there was always a lot of catch up. And I think the manner in which it took out the previous high of 2650, pulled back to that number, and then rebounded in the last few days tells you that that underperforming phase is gone. So I think this is going to continue for many weeks and possibly many months to come. You might finally see that number of 3,000 that we've been waiting for almost a couple of years now, and maybe much greater upside, because the consolidation was so long and so large that the upside potential for Reliance is good. So if you look at the IT basket, if you look at Reliance, and if you look at the bank Nifty, I mean, the levels at which some of the top banks are, I do believe looking at the heavyweights is that the market should be safe.
All right, Gautam, good to see you in. The problem, I think, has been HDFC Bank, right? It's broken all those technical levels. When you look at the 20, the 100, the 200, all of them, they are out of the way. The stock is hovering around that 1,450. And that's the largest constituent on the Nifty in terms of weightage. What's your view technically on this stock? Where does it find some support?
Well, honestly, we've stayed away from this for a couple of years now because, I don't look at things in absolute terms so much. If you look at HDFC Bank relative to the Nifty, you'll see that it's been in an uptrend for the last 1.5 years, or for that matter, even a couple of years. So, and because there is no outperformance, there is no point committing your capital when you know that there are immense opportunities, in other sectors, in the mid cap space, and in the large cap and in the small cap space. But I think talking about numbers, 1380, 1400 is pretty much the long-term support. I do know a lot of people find value at these prices, but as a technician, I want to see momentum and strength before I actually commit myself. But the silver lining is that breaking 1380, 1400 might be a little tough. So I think the chances of HDFC Bank recovering from here is pretty high. But as I said in my last interaction as well, for us, the high conviction idea is SBI. So, that's our top pick for the year.
If you're looking for momentum, then look no further than PSUs, Gautam. What are your top picks there?
Yeah, what an incredible run, Prashant. It's quite amazing that some of these stocks were languishing for years. They were undervalued, they were underowned. Nobody looked at them. And suddenly when the momentum picks up, look at the kind of change that you've seen. I mean, a BHEL at current levels, BEL, BEML, NTPC, REC. And the good thing is that they're still not overvalued. I think that's the reason a lot of smart money is committing into these stocks even at these prices. So be careful. Don't run after stocks which have had a massive run in the last 6 to 8 months, but go after stocks which have not done as well. So I think SBI and Bank of Baroda fit the bill, but the likes of PFC, REC, I think they just run up too much. This is a parabolic run, and these are levels to take profits.
All right, parabolic run and levels to take profits. But you're saying that amidst the entire PSU space, SBI is still your top pick, right, for this year?
I think so, and I want to believe that, keeping the risk reward in mind, because at a 21,700 index, risk reward plays a very important role. When you see that knee-jerk reaction of 3-4%, when the Nifty falls 300-400 points, suddenly everybody rushes towards safety. So I think keeping that in mind, and the fact that you have so many events and earnings lined up over the next couple of months, I want to stay with the safer name. And SBI is still extremely cheap, not just fundamentally, but technically. I think it's in a wonderful space with very limited downside.
Okay, so that's on SBI. Got it. I just wanted the clarification there. Where else do you see traction? There are so many smaller spaces that are doing really well, right? Railways, for example, that entire railway PSU basket is looking good. Anything in that space that you like? Autos has been picking up pace for a while. Where else do you see leadership emerge?
Well, I think railways, we've been very clear that these are levels to take profits for people who actually entered at lower levels. I know every day is a higher high, and you might feel that selling at these levels, is a problem. But I don't see it that way. I think railway is very, very overdone on the charts, the kind of parameters that we look at. And as I said, I'm looking at risk reward in mind. So I still feel that IT, pharma, and metals are three pockets of the market where I see significant outperformance over the next 3 to 6 months. IT has been doing well. Our working target is about 39,400, which is the lifetime high. Pharma, I think, has another 2,000, 2,500 points from here. The moves are excellent. And metals, the likes of Nalco, SAIL, JSW Steel, Tata Steel, Hindalco, all have very good setups. And not to forget the mid-cap, small-cap space. You are in an environment where you don't need to look at the Nifty and the Bank Nifty every day. Just focus on solid, fundamentally sound companies in the mid-caps and small-caps, and you'll do well for yourself.
All right. What about defense as a theme, Gautam? That was the other big outperform, I think, for the last 12 to 18 months. It's gone a little bit quiet, actually, in the last month or so. Anything out there?
Sorry, I didn't get the sector.
Defense. We spoke about railways. What about defense?
Yeah, defense again is a great story if you look at it 3 to 5 years. I mean, as a long-term investor, I want to stay committed. But from a near-term perspective, given the parabolic run that it's seen, and because we look at the technical parameters, there is nothing to justify buying aggressively into defense at these prices. Again, if you're taking profits in defense and railway, if your view is 3 to 6 months, then I think move to other pockets in the market, which might be a little safer. But if you're an investor with a 3-year horizon, stay committed. There is more to come, and you'll just have to ride through corrections.
Absolutely. By the way, the market's in the red. I mean, the Nifty is down about 22 points. And just to quickly take note, so a strong start, 70, 75, 80 point higher start. And this is very early in the session, but I mean, what we were discussing in the morning was don't chase after a very, very strong start. I mean, it becomes very hard now to manage that trade if you sort of go long after what we saw yesterday. So this is a bit of a pullback that we have. As I said, this is the first 10, 12 minutes and things could change, but that's what we have right now. Just a few names in the broader market where, maybe on the downside, which we only looked at, say, Bajaj Finance, but, even stocks which started strong. Look at complete turnarounds. Intradis will tell you, IRDA is started 6% higher, it's down 2%. If you can have that up. And now it's the biggest volume, it's still the biggest volume stock, but on the downside now, IRDA. Same with IFCI, started 6% higher, it's down 7%. So that's a 13% swing already, on IFCI coming through. Look at that. There is IRFC, maybe you could look at, it's a swing on the downside, 2% lower, but from the highs it should be much more. And something like Sterling Wilson, which is down about 3.5%. It's started 1% up, but now that's a 4.5-5% swing from the day's high as it kind of comes through. So this is what we have on the downside now. On the upside, maybe just a quick look at to see if there's anything more in the mix. BHEL, I didn't spot that in the morning. It's on the upside is the biggest volume-led gainer, with a 4% gain, 231 on BHEL. So that continues. JP Power out of the blue. I mean, it's an 18 rupees name, 18 rupees stock, 4% higher, but very large volumes on JP Power coming through. And UTI AMC, maybe, I mean, used to be the cheapest asset management stock. 10% on UTI AMC. Stocks at about, 955 at this stage. And CESE is another one, which is about 5% higher. So these are newer names. Within 10 minutes, there is so much rotation, which kind of is visible with some of the big gainers, which started strong lower, and what started lower or flat now, occupying the top position in that sense. Gautam, anything in the pharmaceutical space that you like? Fundamentally, that's one name that we hear quite a bit, that valuations are still not expensive. US generics, etc. Things are improving. I don't know if that reflects on the price action as well.
Well, Prashant, pharma is not exciting enough, because I think a lot of mid caps and small caps and the names that you alluded to, I think many of these names have been of the questionable variety for a long time now, but they all have great momentum at this point of time. And that's probably the reason I think the momentum has trickled into the grade C and grade D stocks. And as traders and investors, you need to be very careful not to chase momentum at a 21,700, 800 index, because a lot of positives are already pretty much discounted, on an overall basis. But talking about pharma, I think Sun Pharma remains our top pick. I think it has a fabulous setup and it will do much bigger things going forward, followed by Dr. Reddy's, followed by Glenmark. And I think all of these stocks have great setup. So when I spoke about the NSE Pharma Index, our working target is about 90,000. So I do see a 15 to 20% move in that entire space going forward. I mean, if you look at the ratio charts of pharma versus Nifty, you'll realize that there is clearly a lot more performance ahead.
Okay. I wanted your thoughts on real estate, because, this space has come back in a big way. And even this morning, right, you have names like Brigade Enterprises, DLF has been doing really well, Macrotech Developers as well. Anything in that space that you like from a technical standpoint?
No, Sonia, I think it's time to take profits. I think it's a very, very overdone. I think that's been our view for the last couple of weeks. We actually caught it very early, 15, 18 months back, because there was this breakout from a 10-year range. Now, I think all of that is played out really well. We still like DLF and Oberoi if you have a longer term view, say 1 to 3 years. But from a near term perspective, I don't think these are opportunities to get into real estate. So stay away.
Okay, all right. Good speaking to you, Gautam. Thanks so much for joining in and giving us that view. Wishing you a good day ahead.